What's going on, everybody? I'm going through my Saturday scan, my weekend scan, trying to find some discounts. I'm going to record it. Maybe it'll teach you something. Maybe it'll help you out if you like investing on your own. Maybe there's something I can teach you going throughout all this. So I always start with the overall market: S&P 500, Nasdaq, Russell 2000. Um, they're pretty much all hitting all-time highs, especially the SPY and the Nasdaq. It closed Friday at all-time highs. The Nasdaq, all the tech companies are on an absolute tear. The Russell 2000, if the data will load, it's lagging a little bit, but that's just kind of typically what the Russell 2000 does. It doesn't perform as good as the S&P 500, but it's on its way up. What I'm doing to search through these, I'm using Thinkorswim charting software. I just type in the ticker symbol up here in the search bar. The ticker symbol is just a 3 to 4 letter acronym that represents the underlying asset. So again, for the Russell 2000, the ETF that I like is IWM. There are several different ones to choose from. This is just what I prefer. So it's not investment advice, just for information. So I also look at the gold ETF. Gold got rejected on the 315 ish high. It cannot break out of that range. It's tried to 4 times now and it can't do it. It's just kind of sitting here in this consolidation range between 290 and 315. We'll see what happens with that. Bitcoin got rejected at 120,000 a coin. Now it's fallen back to 118. You don't have to have $118,000 to buy some Bitcoin. You can literally have $1, $5, $10 to buy a little bit of Bitcoin. So don't think that you have to have $118,000 to get invested in the Bitcoin network. Okay. Then I like to look at the Dow Jones Industrial Average. That is 30 stocks, hand selected stocks in the U.S. economy. It's really just a broad range. I think Johnson and Johnson's on there, Verizon, I think Walmart, Nike. Um, it's all different sectors, but it represents 30 well-established companies in the U.S. economy. I don't think a lot of tech names are on there. That's why it's kind of lagging behind because tech has been ripping. Then I go through the 11 sectors of the economy. I did make a quick video explaining the 11 sectors in the ETFs and why it's important to follow the flow. The S&P 500 was at all-time highs, but as we'll see here in a second, sometimes there is a sector of the economy that is lagging behind. And I use the sectors as a way to maybe find a discount, maybe allocate some of my portfolio to the sector that's lagging behind. XLK, technology sector, has been on an absolute tear. It is the leading sector this year. XLF is the next largest, the financial sector. The bankers are making a ton of money right now. This is like JP Morgan, Wells Fargo, your MasterCard, Visa, and so on. Next up is XL. Let's go in order on this list here. XLC Communications. This is Google, Meta, Verizon, T-Mobile. Getting a bit of a pullback, but it did make all-time highs Thursday. Next up is real estate. If the Federal Reserve drops rates, this would be a really good ETF to be watching. It did break out of this consolidation zone here of 42 bucks. XLP, consumer staples, really consolidating in a tight range in between like 70 and 83 bucks. I'll zoom out here to see what the all-time high is. This market is extremely choppy in the short term, but pretty consistent up gradual trend here in the long term. So yeah, we've already done XLK. Next we'll look at XLU, the utility sector, having a very nice breakout here. So everything seems to be pointing up so far. XLY, consumer discretionary. I like to think of it like XL, why are you buying this? Like a $6 Starbucks, you don't really need it. Um, anyways, XLY pointing higher. XLI industrial. This is like Raytheon, John Deere, Caterpillar, Waste Management. Really zooming. This could be in effect because of the one big beautiful bill. And I saved healthcare sector for last. As you have seen, we've gone through 10 of them, I believe, and they're all almost at their highs, if not pushing toward it. But XLV, the healthcare sector, is really lagging behind this year. I made a post right here on this red day, very good timing by me, telling people that the healthcare sector is down bad. Most of it is due to UNH, United Health Group, the insurance company. This makes up a very, very large part of XLV, the the healthcare sector, and it has been getting absolutely decimated this year. I believe their earnings are this week. What's really cool about the stock market, what makes the U.S. economy so interesting and so trustworthy, is that these public companies like UNH have to report their earnings 4 times a year. They have to schedule a conference call and tell the public what is going on inside their business, the income, the expenses, their balance sheet, and forward looking statements, what they expect can happen in the future. So, UNH has earnings, I believe, next week. This week or this past week, let's see what the dates actually were, like the 21st through the 25th. We had lots and lots of really interesting earnings. I'll go through the first one. Verizon. I am reading off my paper here. Verizon beat analyst expectations on both earnings and revenue, raised its full-year guidance, including free cash flow and operating cash flow projections. Shares did jump a little bit, contributing to the S&P 500 reaching fresh record highs. But if you know anything about Verizon and T-Mobile, they're almost always trading at a discount. Their stock chart is extremely choppy. This is more for income investors. They pay a really high dividend, but their long-term chart is horrendous. That is terrible looking. Next up is Alphabet, Google. This is just me making an assumption. So don't take this as advice. I think Google's kind of fluffing their numbers because you go out in the public and no one's saying Google it. They're saying Chat GPT it. Although Chat GPT is not making money, Google's search engine is dog shit. I mean, it seems almost antique versus ChatGPT, where you can have a communication, and it literally seems like ChatGPT is able to reason and think. Google and Google Gemini, terrible. YouTube, really good. They're really pushing ads right now. You cannot watch a YouTube video without watching 20 ads. So maybe they're having a ton of ad revenue. Their stock chart is doing really, really good. It's doing what it always does, but yeah, Microsoft looks a lot better. They really delivered strong results, fueled by their cloud services and AI-powered search tools. Its AI overview tool reached over 2 billion monthly users, which is up from 1.5 billion previously. Shares rose a little bit. It's having a pretty nice spike here. We'll see if it can break out past the $200 resistance zone. The one everyone was waiting for and talking about was Tesla, especially all the news and headline Elon Musk has been getting with his feud with Donald Trump. They have a really, really cool products coming out. I can't wait to buy it to see if it can weed eat the Optimus robot. It reported a 12% drop in quarterly revenue. It is not going to be getting the tax or the EV incentive that it's been able to offer the previous years. Trump is putting an end to that. It did launch news of a robo-taxi launch in San Francisco. And ARK Invest, Kathy Woods bought a ton of shares. So we'll see what happens. We'll see what happens. Chipotle, I think it's CHP. What is the ticker for Chipotle? Chipotle, CMG. Getting hit really, really, really hard. Reported its worst same-store sales drop since 2020. citing declining consumer confidence and tough year-over-year comparison. Shares plunged dramatically. I may put this on watch because Chipotle has fire food. Sometimes the market has overreactions, and looking at um, companies after they report earnings, you'll see major swings. There's always a ton of volatility during earnings season. Toyota. Toyota had a pretty nice gap up here. Shares soared 14% following the new U.S. Japan trade deal that including reciprocal tariffs relief from Japanese investments in the U.S. This marked Toyota's biggest one-day move since 2008. American Airlines. What is American Airlines? I'm having brain farts here. AAL. Airline charts are usually pretty bad. Yeah. American Airlines cut its annual profit outlook and forecast a loss for Q3, driving its shares down almost 10%. Southwest also slashed its expected EBITDA, earnings before interest, tax, depreciation, and amortization, by around $1 billion, signaling industry-wide pressure on low-end carriers. I think a lot of people are using AI now to find flights. Southwest is LUV. Yeah, these charts are bad. Um, so next week will be extremely volatile in the market. It somehow seems like when the big tech companies report earnings, the small cap market goes crazy. So I'll be watching the market like mad next week as we get earnings reports from Apple, Amazon, Microsoft, Meta, Chevron, Exxon, Colgate. Let's look at Colgate. I notice it's been getting hit pretty hard. Colgate, CL. Everyone's got to brush their teeth. This is a chart that I have on watch. Regeneron, MasterCard, Abivi, UPS, Procter & Gamble. Let's look at all these charts. Apple's AAPL. They've been getting a lot of scrutiny from the Trump administration. Amazon, Microsoft, MSFT, Meta Platforms, Facebook, Colgate, CL, ExxonMobil, XOM, Regeneron, I think it's REG. Let's see, Regeneron, Pharmaceuticals. Man, down bad. These healthcare companies are getting rocked. Abivi, just sitting here consolidating. Look at Moderna's chart. Really getting slammed. We're also watching the Federal Reserve's policy meeting, July jobs report, and tariff deadline on August 1st. That is the major headline as Trump put an August 1st deadline. We'll see if he pushes it back again or if he can make a deal. All right. So thank you for tuning in. I hope you understand a little bit better how a pro scans the market and looks for deals. There are people that actually believe you can't beat the market. As soon as you say you can't do something, I think you're almost guaranteed to not be able to do it because what you think about comes about and what you focus on grows. My name is Luke Fenwick. This is not personal investment advice. This is for informational purposes only. Do your own research. Past performance is not indicative of future results, and no state or SEC authority approves or disapproves this message. I am obsessed with this game. Thank you so much for tuning in.